Canada's real estate market is cooling off big time. What was once a hot and heavy housing bubble has now been focused to just a few locations. Overall sales are down significantly from their peak, and the government is still promising to make more of an impact to continue to cool this madness down. Will they accomplish their stated goal? You came here for the truth, so let me unveil that for you. Today we're going to look at Canada's housing market. Let's begin with Vancouver. Vancouver, one of the hottest housing markets in North America, is getting a little tougher for wealthy Chinese buyers. So we had seen prices escalating so high, the average person simply could not afford their homes. So the government decided to step in. They tried to make housing more affordable. So I'd covered this previously on the channel, but essentially what was happening was that we had a lot of these wealthy Chinese buyers. They were buying tons of homes, all right? And that was pushing the prices ever higher. You had the speculation, you had all of the real estate assignments, and it just pushed the prices higher and higher and higher. So they said it was the foreign buyers that was the problem, so we are going to act. We are going to implement a 15% foreign buyers tax. And that had a very, very short, temporary effect. So we had seen the prices rising and rising. And then there was this little blip where the prices came down just a hair. And then, of course, prices continued to rise further, beating their previous records. Now, the finance minister decided to announce these new measures coming in. It's going to fix everything. And what is it? A 20% foreign buyers tax. All right. Now, what had happened previously in this little blip that occurred? One of the issues, there are more than one, but one of the issues was that the builders saw this as an opportunity. They said, if the Chinese buyers see this 15% tax as a reason not to buy here, it's not going to be an issue for them because they're going to look at other places. And that's exactly what they did. So they were looking at, I covered it here on the channel before, but the Chinese search engine, immediately when they announced the 15% foreign buyers tax, the Chinese search engine saw a spike in activity that was searching for Seattle real estate. So they immediately switched over. As a Chinese investor living in China, they don't care. They are buying places where they think is the right location and they're getting into it. Whether it's Vancouver, whether it's Seattle, it doesn't really matter to them. So what had happened was these builders came out, they said, we will pay you the tax, the 15% tax. You get your money back, everybody's happy, and then it continued to escalate. Well, there's an issue that is simply never discussed, and that is rising interest rates. If you look at what has happened with interest rates, it has been such a slow crawl on the way up. Barely anything. We are near rock bottom still. It doesn't really matter that they tell us how many rate increases they've had. It's basically near zero. When you look at it historically, it's near the bottom. And so, what would be excellent to see would be an actual rate increase that would actually do something. You can do it in steps, but speed it up a little bit. It's ridiculous how slow they're going, and the reason, of course, is they know they'll crash the system if they do. Just imagine how much the average person in an area like Vancouver and Toronto, which I'll cover in a moment, the average person carries on a mortgage. Many people, if you don't live in one of these major cities, let's just use these examples of Vancouver and Toronto. I'll show you the prices, by the way, in a moment. So hang in there. If you're not from Canada, if you're not from one of these major cities that has very expensive real estate, I'm going to show you how bad it really is. The average person is carrying, at the absolute minimum, $500,000. And this is so conservative. $500,000 in mortgages. There's no way they're ever going to pay that back. Plus the student loans, plus the car debt, plus everything else, just piled on top. And there's no way they're going to pay it off, or they'll pay it off over, let's say, a 25, 30-year period. But in the between those times, they're going to get new cars along the way. They're going to buy more big-ticket items. They're going to take vacations with the family, and it just compounds and compounds. This is the problem. I'm always trying to link it back to the overall issue. I'm not just, reading some information. You can do that for yourself. All right. Canadian home sales plunged the most in a decade last month, driven by fewer transactions in a Toronto market squeezed by tougher mortgage lending rules and higher interest rates. The interest rates, I assure you, are nothing compared to what they should be. Sales fell 14.5% nationwide from December and were down 26.6% in Toronto. Those are official statistics. The national decline was the biggest since 2008, and Toronto's was the biggest since 1989. We are talking about a very, very significant drop in sales. It's not something that's, just to brush off, as many people would. I mean, people in the industry, obviously, they have a reason to, but you just hear the average person who has so much debt on their mortgage, they will brush this off. The mainstream media will brush this off. But here on the Money GPS, you got to hear the truth, no matter how badly it hurts. If you have $1 million mortgage, which quite frankly, these days, it's not that big of a deal for a lot of people. Of course, you have a reason to believe that these prices are not going to come down. The housing market is cooling off from a heady price gains, 30% in Toronto, after policymakers stepped in with measures including a foreign buyer's tax. The January decline comes after a record December when buyers rushed into the markets before a new federal mortgage lending stress test came into force. The Bank of Canada raised their interest rates barely. Okay, now looking at this here for just a moment, you're seeing that they implemented these stress tests, and of course people knew, okay, this is my last chance. I have to get in now or I'm screwed, because I can't actually afford the mortgage, so I'll get in right now, and then nobody will find out for a few years until I have to refinance. That's the way it goes. Now think about it. If somebody gets into the market, let's just say on a longer term scenario, interest rates are heading in this slow and steady rise upward, right? And somebody along the way decided, okay, December's coming, I'm going to get in right now. Now is the time to do it. All right. So these so-called intelligent people got on at this point, but we're not done yet. Interest rates may still rise. And so at some point, maybe they didn't get the variable mortgage because they were scared. At some point, guess what? They have to refinance, and that's when they're going to be screwed. Fixed or variable, eventually you have to pay the price. Toronto's housing market drop is echoing Vancouver's earlier plunge, but Canada's most populous city may not bounce back so quickly as new rules continue to tighten access to home loans. The average person is so far into debt, you have no idea. If you're not paying attention, truly, you can't imagine it. And I'll show you. Hang in there. I will show you the prices. Canada's two largest housing markets both saw a dramatic slide after a raft of regulations were instituted to tame the runaway house prices. Benchmark price gains in Vancouver fell for 5 months after policymakers introduced a foreign buyer's tax in August 2016 and began climbing steadily again in early 2017. Toronto, the prices have fallen for 7 months. since May, and the market continues to cool. So don't listen to them when they tell you that overall the market is just going to continue to rise. The market is not continuing to rise on a national level, or even if you look at necessarily, a wider, let's say, provincial level or anything else. If you look at particular areas, the more affluent areas of these cities, I assure you, prices have risen. But what we have seen is the euphoria. This is true story, many cases of which people would be standing outside of the home, the real estate agents and the prospective buyer would go in, they would make their offer, they would come back outside of the house, the next person would take their turn, make the offer, they would come outside of the house. The situation was so crazy that there were people lining up days before condo developments would take place just to be able to get in, to make sure that they could get a place, because they would sell like hotcakes. We're talking about prices that were going into astronomical territories. People couldn't afford it, but it didn't matter because they were scared, the fear of missing out. What if I can't get it? I want to buy a place. Okay, I have to get in. I have to pay whatever they say. Interest rates, I don't really care. I just need to get in. And that's a euphoria. That's when you know you have a big problem. To be sure, Toronto has seen some signs of recovery in the past 2 months, with sales in December having the smallest yearly decline since the introduction of a foreign buyer home tax in Ontario in April. Still, the market now faces new hurdles as home buyers who don't take out mortgage insurance will have to qualify at higher rates. Oh, so you didn't have just 5% to put down. You need to put down a little more. People don't realize what they're getting themselves into. You can't do that. You can't put 5% down on a mortgage and expect that that's enough when you're looking at homes that are very expensive compared to the average person, what they're making. 5% is not enough. It's not enough. Your mortgage is going to be so expensive now, today, but imagine what it will be when interest rates rise. All right, I just pulled up TD Bank just to get us an idea here of what we're looking at. 5-year variable close, we're looking at the 3-year fixed close, and of course, they're not showing us the 5-year fixed on here. So let's just take the 3-year, for example. Hey, even this 6-year, right? Let's say 3.5%. 3.5%. It's a fair price. It's a decent price. I mean, we were looking at rates that were at 2.5% a little while. So the mortgage rates have increased about 1% on average from what I've seen from their low point. And guess what? Guess where they'll go? Even if the central bank increases just a notch. So we'll see this notch going up higher and higher, little steps upward. The commercial banks will take larger leaps up. They don't care. It's not in their business to worry about what the central bank is doing. They do it in anticipation of the central banks. So be very mindful of what the central banks are doing, but look at the commercial banks as well. Don't just look at the one entity. Now, very briefly wanted to mention the fact that the next monetary policy decision, March 7th. So, of course, I'll be covering that here. But there is the general sentiment that the Bank of Canada will not increase their interest rates. They are going to leave it at this level for a little while until the end of the year. And then they're suggesting that they're going to continue on. We'll see. If they continue to increase, it's going to be yet again another small step upward. All right, next, last but not least, for the average person who's living in a place, let's say the average home that sells in your area is 2 maybe $300,000, maybe $400,000, right? You're going to be shocked by this. This is in Canadian dollars, of course, but take it for what it is. This is from a website, Zoocasa. I just happened to look up some real estate prices. This came up. I don't know how official these statistics are, but this is what's on this website as of right now, as of this recording. There are 1,700 houses and townhouses and condos. Let's look at the prices. The average listing price, okay, that's not the sale price, but the average listing price for all home types is $1.2 million. Okay? The average listing price of a house is about $1.8 million, $700,000 for a townhouse, and $736,000 for a condo. I don't even know how that's possible. The average lease price of an active rental is $2,900. I've seen statistics at $2,100 and change, but that's on this particular website. Either way, I've seen numbers a little bit. This seems a little bold to me, but the average home price, I mean, 1.2 even, 1.2 million. I've seen that. The average townhouse, I think, is actually, that's, if anything, that's low. The condo might be a little low as well, but we've seen actually the prices on condos rising specifically because why? People are priced out of the market. They can't get into the townhouses. They can't get into the detached and the semi-detached homes. So they're going in there. They're being squeezed and squeezed and squeezed. So this is a big problem. The average person doesn't really realize what's happening, but they see panic, they see euphoria, and they jump on the bandwagon. We have a big problem. It's not being discussed, and that is interest rates. The central banks know that if they increase those interest rates, guess what's going to happen to real estate. I would love to see it personally, but I fear that they will chicken out along the way. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.